The bigger news is he's with us again, as he is every Tuesday. Dan Hernandez joins us right now, certified financial planner and financial rep at Milestone Wealth Management. Dan, I have been penalized not once but twice in life with a marriage tax, and in New York they call it a divorce. But now it looks like the Biden revenue plan includes a marriage penalty.
Yeah, he threw out there that we're not going to tax anybody, or that no one under 400,000 is going to feel any increases. But that number is getting fuzzier every day. So it looks like, yeah, if as a couple you're over 400,000, you could get nicked. Certainly, individuals over 400,000 will get nicked. We'll see. I mean, a lot can happen between now and when this thing ultimately passes, but yeah, there's no doubt that everyone's going to be paying a little more, I think.
Well, I had a relationship expert on last week, and she was talking about how the pandemic, when the courts start opening fully, there's going to be an overload of divorces because husbands and wives have been forced to live in close quarters for so long. So maybe people will be more incentivized to get divorced to get away from this new marriage penalty or something. But married couples, right. You have another reason to not stay married, it seems.
Yeah, well, and it's also, if it passes as kind of proposed, it also may give rise to married couples filing separately too, because there could be some advantages to that.
Got it. I know when we first started talking, you weren't a big favorite of it, but Bitcoin continues to hold its own as it gets higher. And I think there's some market theory that says the higher it gets, the less volatile we get on a percent basis. But they're saying, some experts are saying like $1 trillion is just the tip of the iceberg here.
Yeah, and you're right. Look, when you and I first started talking, I was skeptical, and I'm still a little skeptical, but every day it's becoming a little more prevalent. And what's going to happen, and part of what those experts believe that's going to make it continue to go up is if it becomes a viable part of portfolios, and people that manage portfolios, not only privately, but institutionally and so on, they're always looking for assets that are negatively correlated. And what I mean by that are assets that are going to perform differently than the U.S. stock market. And Bitcoin certainly, will fall into that category, as does, in some cases, precious metals and so on. But Bitcoin can be a separate asset class that if it marches to its own drum, then it serves a purpose in these bigger portfolios. And if it serves a purpose in these bigger portfolios, then professional investors and institutional money managers are going to start buying it more.
So, Dan, about 5 years ago, I was one of the founding members of a subsidiary of Overstock.com called T0. And Overstock became the first company to ever in the U.S. to accept Bitcoin for transactions. And right around that time, Jamie Dimon had come out and said it's a complete fraud, it's a complete scam. Warren Buffett and Charlie Munger came out and said it's a Ponzi of all Ponzi's, right? And I'm not saying I'm smarter than those guys, but 5 years later, Jamie Dimon, and I was really impressed, or at least feeling good, when Blackrock came out in December and said they're the largest asset manager in the world. I think when you talk about a negative correlation, I think the Bitcoin is more of a hedge or a flight to safety from a weakening dollar also.
Yeah, no, you're absolutely right. And any hard asset, and I don't want to put Bitcoin in the category of precious metals because I think it's significantly different. But the point is still is negatively correlated. And you're right. If the dollar starts to get weaker, and that probably isn't real far-fetched here in the future, Bitcoin can serve a purpose there. So you're right. BlackRock, and when you have Elon Musk and Tesla and Square taking positions in it. I mean, it's things have changed since you and I started talking, not that long
ago. Absolutely.
And it's changing every day. So while I'm not it still has risk and it's not for everybody. It's certainly becoming a more prevalent part of a building portfolio. That's for sure.
So, Dan, our last couple minutes here, the Dow hits a new record, but U.S. banks and prime brokers are are exposed right now to hedge funds.
Yeah, look, I think today is a funky day for that reason, and as we approach the end of the quarter, there could be some portfolio rebalancing. But generally speaking, you have consumer confidence at a pandemic at the highest level it's been since the pandemic started. You have unemployment numbers going down, employment numbers going up. And so far in March, we've added about 600,000 jobs. So generally speaking, I continue to be cautiously optimistic. I think all these numbers are just going to get better here, heading into the summer and throughout the summer. The fears of any tax hikes while looming, people tend not to worry about that until it becomes official, and B, a lot can change. From this proposed the proposed regs to what ultimately gets passed. So while it's out there, it's not. I don't think it's really affecting investors yet. They're more focused on these numbers and things opening up and getting better.
Well, Dan, you did it again. Great, insightful stuff. Our audience out there, that love the financial news, they love hearing from Dan Hernandez. He's with Milestone Financial. You can also reach him at dhernandez@lincolninvestment.com. Dan, thank you so much for joining us as usual, brother. Appreciate it.
Have a good afternoon, John. Thanks.